Jaguar. This is a luxury car maker that once brought you the roar of a V8 engine. It's now moving towards electric vehicles.
Jaguar is done. Not struggling, not having a rough patch, done. For decades, Jaguar stood as a symbol of British luxury and automotive excellence. But today, the brand is collapsing before our eyes, fighting with its loyal customers, making catastrophic business decisions, and watching its relevance slip away. You might think this is just another car company making mistakes, but this is part of a much bigger trend, and Jaguar isn't the only one. Ford, General Motors, and even Mercedes-Benz are also spiraling, caught in a battle between government regulations, shifting consumer demand, and a dying sense of brand loyalty. So what really went wrong? Why are automakers making these fatal miscalculations? And more importantly, how does this affect you? Stick around because what's happening now will reshape the entire car industry. The ad that killed Jaguar. One bad commercial destroyed an entire car brand. Here's how. Jaguar released an advertisement that sent shockwaves across the industry. The commercial was meant to signal a bold new direction, but instead it alienated Jaguar's core audience and became the moment that defined the brand's downfall. Social media erupted almost instantly. The backlash was swift and brutal, with critics mocking the ad for its over-the-top imagery, unclear messaging, and a complete disregard for the traditional Jaguar aesthetic. It was meant to project modernity, but to many it looked like an identity crisis. Some called it pretentious. Others said it was nothing more than a forced attempt at appearing relevant. But the loudest reaction came from those who had once been Jaguar's most loyal supporters. They felt betrayed. As the internet tore apart the campaign, one voice stood out among the critics. A single comment from a well-known industry leader cut through the noise. The words were simple but devastating. "Do you even sell cars?" That comment, made by one of the most influential figures in the technology and automotive world, sent the brand into a deeper crisis. Jaguar's attempt to respond only made matters worse, as their official statement felt detached and robotic. The damage was already done. This was Jaguar's equivalent of a brand implosion. In the modern digital landscape, a single misstep can snowball into something far greater than an advertising blunder. This was not just a bad commercial. It was a defining moment that exposed a deeper issue. Jaguar was no longer a brand that people aspired to own. And that was just the beginning. How Jaguar lost its luxury status. Jaguar was once Britain's answer to the finest European sports cars. It was a brand synonymous with style, performance, and exclusivity. The E-Type, with its stunning design and unmatched presence, was an icon. The XJS continued that legacy, delivering a blend of elegance and power that solidified Jaguar's place in automotive history. But somewhere along the way, that prestige faded. The decline did not happen overnight. It was a slow unraveling, the result of a series of miscalculations, inconsistent leadership, and an inability to keep pace with changing consumer expectations. Jaguar, once a leader, found itself reacting instead of innovating. The problem was not just the cars themselves, but the perception of the brand. Luxury buyers demand more than just a well-built vehicle. They expect an experience, an identity that resonates with their aspirations. Jaguar failed to evolve in a way that connected with new generations of luxury car owners. While competitors like Porsche refined their identity and expanded their appeal, Jaguar struggled to define itself. In contrast, brands like BMW and Tesla understood their markets. BMW leaned into performance and precision, making their vehicles desirable for both enthusiasts and professionals. Tesla redefined what it meant to own a luxury vehicle by combining technology with exclusivity. Jaguar, on the other hand, seemed lost. It was no longer the benchmark. It was a brand desperately trying to reclaim relevance. As the automotive world evolved, Jaguar found itself stuck between outdated expectations and an uncertain future. Instead of focusing on what made it legendary, the company attempted to chase trends, hoping to attract a new audience. But the audience that once cherished the brand had already moved on. And then Jaguar made its biggest mistake, betting everything on a doomed trend, the EV gamble that backfired. The brand made a bold declaration. It would transition to an all-electric lineup, abandoning internal combustion engines entirely. This was not a minor adjustment, it was a complete reinvention. The company wanted to position itself as a forward-thinking luxury brand, ready to compete in an era defined by sustainability and cutting-edge technology. But the timing could not have been worse. Electric vehicle adoption had been growing steadily, but cracks in the market were beginning to show. Charging infrastructure remained inconsistent, battery costs were still high, and widespread range anxiety made many buyers hesitant. While governments and automakers were pushing an electric future, consumer enthusiasm was not keeping pace with industry expectations. Many potential buyers were interested in electric vehicles, but unwilling to commit due to lingering concerns about cost, charging convenience, and long-term reliability. Some brands were able to navigate these challenges successfully. BMW and Mercedes-Benz took a balanced approach, maintaining a strong lineup of gasoline-powered and hybrid vehicles, while gradually introducing electrification. Even Tesla, the industry leader in electric mobility, was adjusting its strategy, lowering prices, extending delivery timelines, and rethinking its production priorities based on market realities. Meanwhile, Jaguar went all in, leaving itself with no safety net. The problem was not just the decision to go electric, but how Jaguar executed the transition. The company failed to introduce compelling new models fast enough. The vehicles it promised were slow to arrive, lacked the innovation to stand out, and failed to generate excitement. Consumers were essentially asked to trust that Jaguar could suddenly become a leader in electric vehicles, despite the company having no proven track record in that space. Instead of attracting new buyers, Jaguar's strategy alienated its existing audience, while failing to establish credibility in the electric segment. The result was predictable: weak demand, declining relevance, and an identity crisis that left Jaguar stranded between two markets. Its gasoline-powered models had lost their appeal, yet its electric push had no momentum. It was a strategy built on hope rather than careful planning, and hope is not a business plan. And if Jaguar thought this gamble was a safe bet, they were in for a rude awakening. The Tata problem: why Jaguar's parent company is running out of patience. Tata Motors, the parent company of Jaguar, once saw great potential in revitalizing the brand. When Tata acquired Jaguar in the late 2008 period, there was optimism that the Indian automaker could bring fresh investment and strategic leadership to turn the struggling British brand around. For a while, that optimism seemed justified. New models were introduced, and Jaguar attempted to recapture some of its past prestige. However, as the years went on, it became clear that Jaguar's challenges were deeper than expected, and Tata began to reassess its commitment. The real issue is that Jaguar is not Tata's most valuable asset. Land Rover, also under Tata's control, has been far more successful. While Jaguar fights for relevance, Land Rover continues to dominate the luxury SUV market. That presents a major dilemma for Tata. Should it continue to invest in a struggling brand, or should it shift its focus entirely toward Land Rover, which has consistently delivered strong sales and brand loyalty? From a business standpoint, Jaguar is becoming harder to justify. The company's ambitious plan to go fully electric by 2026 demands significant investment in research, development, and production. Yet with weak demand, slow sales, and a lack of excitement around its upcoming models, the financial returns are far from guaranteed. In contrast, Land Rover's lineup of profitable, in-demand SUVs continues to be a major revenue driver for Tata. With an ever-expanding luxury SUV market and rising global demand, Land Rover's future looks stable, while Jaguar's remains increasingly uncertain. There are clear signs that Tata's confidence in Jaguar is fading. Investments in new Jaguar models have been cautious, with fewer resources allocated toward high-risk projects. The brand's leadership has sent mixed signals, often prioritizing Land Rover initiatives over Jaguar's revival efforts. There have even been discussions about restructuring Jaguar entirely, either scaling back production, reducing the model lineup, or even considering external partnerships to reduce the financial burden. For Jaguar, this is a dangerous position to be in. The brand is no longer in control of its own destiny. Instead, it is at the mercy of corporate decisions being made halfway across the world, where executives must decide whether Jaguar is worth the effort. If Tata decides to cut its losses and shift its focus elsewhere, Jaguar could be left stranded, with no clear path forward. And if Jaguar's financial situation is bad, just wait until you hear what's happening at its dealerships. The sales disaster. Jaguar's numbers are worse than ever. A decade ago, Jaguar was selling well across major markets, with its sedans and sports cars commanding respect. But in recent years, sales have plummeted. The decline is not just a temporary dip, but a sustained collapse, showing no signs of recovery. luxury car buyers have turned their backs, and Jaguar has struggled to attract new customers. The company has been left with a lineup that fails to compete with modern expectations. Part of the problem lies in Jaguar's reluctance, or perhaps inability, to keep up with shifting consumer preferences. The luxury car market has changed dramatically, and buyers are demanding more technology, better reliability, and stronger resale value. Jaguar has fallen short on all three fronts. While competitors like Porsche and BMW continue to refine their offerings, Jaguar has been slow to adapt, relying on outdated models that do not capture the interest of modern buyers. The depreciation issue is another major factor driving away potential customers. Luxury cars are expected to hold their value, offering a sense of investment alongside prestige. But Jaguars are notorious for rapid depreciation, losing value at an alarming rate compared to other brands in the same category. This is not just speculation. Data from resale markets consistently ranks Jaguar models among the worst in terms of value retention. Buyers who spend a significant amount of money on a Jaguar often find themselves regretting the decision within a few years, when the car's worth has dropped far below expectations. All of these issues combine to form a perfect storm. Jaguar is not just losing sales, it is losing credibility. The brand no longer holds the prestige it once did, and buyers are hesitant to invest in a name that seems to be on the verge of collapse. But sales are only one side of the story. The bigger issue is what is happening at the dealership level, where Jaguar's problems are becoming impossible to ignore. Dealers are abandoning Jaguar, a death sentence. Luxury car dealerships are not just showrooms. They are strategic partners in a brand's success. They rely on steady demand, high resale value, and a strong customer base to keep operations profitable. When a brand begins to struggle, dealerships are often the first to see the warning signs. In Jaguar's case, those warnings have turned into undeniable red flags. Across major markets, Jaguar dealerships are either shutting down or switching to other brands. The reason is simple. Jaguar vehicles are not selling, and maintaining a dealership is no longer worth the effort. Operating a luxury car dealership is expensive. From showroom upkeep to trained service staff, the costs are high. But if the cars are not moving off the lot, those costs quickly become unsustainable. Jaguar's weak resale value has also made life harder for dealerships. Customers looking to trade in their Jaguars for newer models are often shocked at how little they get for their used vehicles. This, in turn, makes them reluctant to buy another Jaguar, further reducing dealership traffic. As resale prices fall, leasing deals become less attractive, creating another ripple effect that damages sales. Even the most loyal Jaguar dealerships, those that have stood by the brand through decades, are now reconsidering their partnerships. Many have quietly reduced their Jaguar inventory, giving more space to other brands that guarantee a steadier flow of customers. Some have dropped Jaguar altogether, choosing instead to focus on brands with better long-term prospects. This dealership exodus is a serious problem for Jaguar. When dealers start walking away, it signals that they see no future in selling the brand. Without a strong dealership network, customers have fewer locations to shop, test drive, or service their vehicles. A struggling dealership network leads to a downward spiral, making it even harder for Jaguar to recover. If Jaguar's presence in showrooms continues to shrink, its chances of rebuilding the brand become even slimmer. But there is another problem even more urgent than dealerships turning their backs. The real issue is the customers themselves, because even those who once loved Jaguar are now walking away. Why Jaguar customers are walking away for good? A brand can survive bad marketing. It can recover from a failed model. But when loyal customers turn their backs, it is often the beginning of the end. Jaguar has long relied on a dedicated following, people who saw the brand as a statement of style and performance. But that loyalty has eroded, and Jaguar's attempt to win over new buyers has only made things worse. The biggest complaint among Jaguar owners is reliability. Luxury cars are supposed to offer refinement and engineering excellence, but Jaguars have developed a reputation for frequent breakdowns and expensive repairs. Owner satisfaction surveys paint a bleak picture, with many customers frustrated by mechanical issues that should not exist in a premium brand. Even those who love the design and driving experience are finding it difficult to justify the long-term costs of ownership. Jaguar's shift in branding has also alienated its core audience. In recent years, the company has attempted to position itself as a modern, progressive luxury brand, but instead of appealing to new customers, it has pushed away its traditional base. Many longtime Jaguar enthusiasts feel disconnected from the brand, no longer seeing it as the aspirational vehicle it once was. New buyers have not stepped in to replace those who have left. Jaguar's attempt to attract a younger, more diverse audience has not translated into actual sales. The reality is that the people who can afford a luxury car tend to value heritage, prestige, and proven performance, qualities that Jaguar has failed to emphasize in its recent marketing. The result is a brand stuck in limbo. It is not winning over new buyers, and it is losing the loyalty of past customers. This is a dangerous position for any luxury brand, but for Jaguar, it is even more critical because the company does not have the financial cushion of larger automakers. The risk of fading into irrelevance is becoming very real, but Jaguar is not alone in this struggle. The entire luxury car industry is facing a transformation, and those that fail to adapt will be left behind. Why luxury cars are changing forever. For decades, luxury cars followed a simple formula: powerful engines, elegant designs, and premium materials. But the market is shifting, and what buyers want from a luxury car is changing. Jaguar's failure to recognize this shift has been one of its biggest missteps. The rise of sport utility vehicles has changed everything. More than ever, luxury buyers are choosing larger, more versatile vehicles over traditional sedans and sports cars. Brands that embrace this trend, like Porsche and BMW, have thrived. Jaguar, on the other hand, has struggled to find its place in this new landscape. Technology has also become a key factor in luxury car appeal. Buyers are prioritizing high-tech features, automation, and seamless connectivity. Companies like Tesla have set a new standard, forcing traditional luxury brands to keep up. Jaguar has lagged behind in this area, offering vehicles that feel outdated in comparison to the competition. Younger buyers are another challenge. The new generation of luxury car shoppers is not drawn to traditional brands in the same way their parents were. They value sustainability, advanced technology, and brands that align with their lifestyle. Jaguar's identity crisis has made it difficult to appeal to this demographic, leaving it in a position where it does not fully resonate with any group. The auto industry is evolving, and those that fail to adapt will not survive. Jaguar's missteps have placed it in a vulnerable position. But the brand's struggles are not unique. Other automakers are facing similar challenges, and the next few years will determine who rises and who falls. What happens next will shape the future of the luxury car market. Jaguar isn't alone. Other brands are failing too. Jaguar's fall is part of a much bigger problem, and they are not the only ones feeling the heat. Once upon a time, legacy automakers dominated the industry with a mix of engineering prowess, brand prestige, and a deep understanding of their customers. But now a shift is underway, and many well-established brands are struggling to keep up. Ford, General Motors, and Mercedes-Benz, three of the most recognized names in the industry, are also facing turbulent times. While each of them has its own unique set of challenges, one common factor is accelerating their struggles: the rapid transition to electric vehicles. Just a few years ago, governments and automakers alike were convinced that a fully electric future was inevitable, and brands raced to outdo each other in pledging aggressive transitions. Ford announced multi-billion-dollar investments in battery plants. General Motors set a deadline for an all-electric lineup. Mercedes-Benz committed to a future that would eventually leave behind combustion engines entirely. Then reality hit. Consumer adoption of electric vehicles has not kept pace with the industry's expectations. Buyers are hesitant, not because they dislike electric cars, but because of persistent issues that automakers have failed to address. The charging infrastructure remains underdeveloped, making road trips inconvenient. Battery replacement costs are still too high. Prices for new electric vehicles have soared beyond what the average buyer is willing to pay. And perhaps most importantly, many drivers remain skeptical about whether electric cars will truly deliver long-term reliability. This hesitancy has already begun to show in the numbers. Ford has had to scale back its ambitious production targets due to lower than expected demand. General Motors has struggled to ramp up electric vehicle sales at the pace it once promised, with dealers reportedly sitting on unsold inventory. Even Mercedes-Benz, known for its forward-thinking luxury innovations, has faced criticism for putting too much emphasis on a shift that consumers are not ready for. Complicating matters even further are government regulations that continue to push for an aggressive electric transition. While some incentives have made electric vehicles more attractive, policies forcing manufacturers to abandon combustion engines altogether have put brands in a difficult position. Many companies are now caught between regulatory pressures and consumer hesitation, forcing them to rethink their strategies. But beyond the electric vehicle dilemma, there is an even bigger challenge that threatens the very foundation of these brands: a complete transformation in consumer behavior. Buyers today are not as loyal as they once were, and this shift is reshaping the industry in ways that no automaker is fully prepared for. But this transformation in the marketplace has created an urgent question. If traditional automakers are struggling to retain their customers, who is positioned to take their place? The future of luxury cars. Who will survive? In 5 years, Jaguar might not even exist, but that does not mean the luxury market will disappear with it. Instead, a new generation of automakers is rising, and they are rewriting the rules of the industry. One of the biggest disruptors is Lucid, a brand that has positioned itself as the next evolution of luxury electric vehicles. With high-performance capabilities, cutting-edge technology, and a focus on range efficiency, Lucid has captured the attention of buyers who are looking for an alternative to traditional European luxury brands. Then there is Rivian, a company that has carved out a niche by blending rugged off-road capabilities with premium electric innovation. While traditional luxury automakers struggle to redefine themselves in an electric future, Rivian has built a brand identity that feels fresh, modern, and tailored to the adventurous buyer. But the biggest advantage still lies with established players like Porsche, Tesla, and Lamborghini, brands that have found ways to stay relevant while navigating the changing landscape. Porsche, for instance, has seamlessly integrated electric technology into its lineup without sacrificing its performance heritage. Tesla, despite facing its own challenges, remains the leader in electric innovation. Lamborghini, a brand that many expected to struggle in a more environmentally focused era, has managed to maintain its exclusivity while making strategic adjustments. What these brands have in common is their ability to evolve without losing their core identity. They have not abandoned what made them successful. They have simply found ways to integrate new technologies and market shifts while staying true to their brand essence. That is where Jaguar went wrong. Instead of adapting, they tried to reinvent themselves entirely, leaving behind their legacy in pursuit of a new direction that alienated their existing customers. Now the question remains, can they still turn things around, or is it already too late? Can Jaguar be saved, or is it too late? Does Jaguar have any chance of survival, or is it doomed to become another forgotten brand? The answer depends entirely on whether they can course correct before it is too late. One possible path to recovery is new ownership. If Jaguar were acquired by a company willing to invest in a proper turnaround strategy, there might still be hope. However, for that to happen, potential buyers would have to see real value in the brand, a difficult sell given its current trajectory. Another strategy would be to overhaul its product lineup completely. Jaguar could follow in Porsche's footsteps, blending modern electric innovation with the performance and design elements that made them iconic in the first place. Instead of chasing trends, they would need to focus on reclaiming what made Jaguar desirable. Perhaps the simplest solution would be a drastic price adjustment. If Jaguar accepted that it could no longer compete at the highest luxury tier, and instead positioned itself as a more affordable premium brand, it could carve out a new niche in the market. This would require a complete restructuring of its business model, but it might be the only way to attract a sustainable customer base. There are lessons to be learned from brands that have successfully reinvented themselves. Porsche faced financial trouble in the past, yet it managed to come back stronger than ever. Lamborghini, once on the verge of irrelevance, rebuilt itself into a symbol of exclusive luxury. The path forward for Jaguar is not impossible, but time is running out. The biggest mistake they could make is to continue down their current road, refusing to acknowledge what went wrong. But ultimately, the real question is bigger than Jaguar. Their downfall is just one chapter in a much larger story. The auto industry is shifting, and every automaker must decide whether they will adapt or be left behind. But what's your perspective on all of this? Thanks for watching, and let's know in the comments.